Welcome to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. This update is for Monday, the 13th of February, 2013. Hope you're having a great day. Hope it was a great trading day for you. It has been an interesting week to say the least. So with that, I really want to just dive right in, folks. When we look at the VIX, right, we've gotten a little bit of rise in the VIX in the last couple of days. A little down today, yesterday and the day before really. So on Wednesday and Thursday, really the largest moves overall. We're sitting at about 20.5, which really is not that big a deal, right? We're still at a very low level on VIX overall. Nothing to be concerned with whatsoever, right? But we did see some nice rise from where we were about 18 or so, a little bit earlier on in the last week and a half or so. So if we go ahead and look now at the S&P 500, let's go check that puppy out and see what's going on. I want to look big picture is where I want to start today. So we're going to head into the monthly. You know, this would now be, January was a close above that downtrend. February, we're still above that downtrend. If we can maintain that, that is fantastic, right? For the bulls. Weekly, we've had a couple of weeks now where we've had pushes above and continued closes above that that upper line there on that downtrend line. Now we go back and look at the daily chart. From the daily, what are we looking for? What are we seeing there? All right. You guys have all seen this. Week after week, I show this picture of how we've got this overall big downtrend going on in the grand scheme of things. We took a bounce off of where I put that little red triangle there. I'm just going to delete that out of there for now. From this lower level, we took a bounce. We ran into resistance. We failed. We did not get as far down. And we bounced. We broke out, we retested, we came back again. We pushed into the 41.81, and that is the key level right now. This was on let's see. Come on. Right there. And what in the world is going on? Why am I getting that number there? All right, so Thursday the 2nd. There we go. So last week, this was Thursday. Sorry, I was just looking in the wrong spot. And as I see that push up and there, we closed right at the 41.81. Beautiful. We knew it would be resistance, and that was that. We get a long-tailed doji with the candle closing on the lower quadrant of the overall pattern, the high and low. Gap down to the 8. Good strong move back up there on Tuesday. Wednesday was a fail. Thursday was a fail. All of these setting up with lower highs. Yesterday, Thursday's close, we got down into a bullish neutral bias on the S&P 500. So what is that telling us on this candle here? The bulls had been fighting, right? And pushing and pushing. We got up to the 41.81. And now, whether it's just a breather, whether we are just at a natural pause point, people are taking profits, whatever you want to call it, whatever's going on there, we saw some lull in the gains take place. Now, did the announcements from Powell help some of the bullishness in there? Absolutely, right? Traders are still fighting overall that the market's not going to continue to go down because interest rates are almost done going up. There's more to it than just the interest rates. Take it from someone who's been through this since 1997. I've been through a couple of these markets before. I've got a fairly good understanding of what tends to happen, and this could be different than they've been in the past, but if history does repeat itself, we're still in for a little bit more pain. I don't think we're going to see the massive lows any longer, but I think there are a lot of things that are still out there to come. I think there's a lot of layoffs out there that we're not seeing yet come out, right? A lot of tech layoffs, 150,000 people or so it was, I think, this year so far in tech have been laid off. I mean, that's massive, right? And eBay, PayPal, all kinds of announcements going on out there. Right, today we came down and we gapped down on the open right about that 40.71 level, which is the negative 382, right? From there, we stretched a little bit further down towards the 21, not quite, and we got a bounce. Now, we are still in a a bullish neutral bias, right? We're still getting lower highs. We broke through the 8. Our next downside concern is the 21. You see, what did we do today? We chipped away at the ice. Right? That little ice chipper, right? That little chipping hammer. We broke away at that fib line right there and pierced down. We bounced, but we've kind of broken the ground up a little bit and given way to say, yep, if you want to continue that path, we already started for you. It's a lot easier to go through it now. right? So we'll see, pinned between these two moving averages, where we wind up come this following week. If we push to the downside, then there's no question. I'm trading it down to the 55 and then down to the next fib line, which the 55 right now is 39.83. And the next fib line is 39.11. So I'll scale out of some at 39.83 and take the rest of the trade down to 39.11. Right? If we bounce and get above the 8, ideally I'd like to see the move above the retest and the bounce. Now that's the ideal setup for us. Why? Because we're already in a bullish pattern. Right? Short term as it may be, we're already in a bullish pattern. If that happens and we've got some room up to that 8 moving average, you got to be careful there. That is going to act as a resistance. That breakout pushes you back up towards that 41.81, 41.71, 81 level for that next fib level, right? And we'll look at it from there next week. If it breaks out of the 41.81, here's my ideal. Breaks out of the 41.81, retest, bounce, boom, chakalaka. Now we're going to head and look for long directional swing trades at that point. All right, there you have it, ladies and gentlemen. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care. Have a great trading week. And I will see all of you at our next update. Bye for now.